Welcome everyone. I'm Ajal from the Village Family Services. Today we are going to talk about a sensitive topic, life insurance. Jim Clement is a wealth manager and financial advisor with Financial Horizons Group in North Bay, Ontario. Hey Jim, how are you?
Bonjour, bonjour.
Ça va?
Ça va bien?
Thank you for being here today.
You're very welcome.
So we have a few questions to go through. First question I have for you is, what is the insurance plan monthly and annual premium?
Okay, well, this is a loaded question because the truth of the matter is it's extremely individualistic. So normally it's based on the specific needs and the situation of a family. So health, your age, and what need we have to cover are the main factors. So the younger and healthier you are, the less expensive it will be. So the way that we operate for life insurance, for example, is we do a full needs-based analysis. So we find out, for example, what kind of care do we want for our kids if we're no longer around to take care of them? And then we find out how much it's going to cost to get this care. So from there, we find out what the exact amount is, and we reverse engineer it. So we find out which kind of insurance coverage we need. So whether that's going to be term insurance or permanent insurance. And if it ends up that insurance policy will cost a little bit too much, a good advisor can actually help you either budget or save you money elsewhere to be able to fund this policy. And also the beauty with working with an advisor who's on the brokerage side is they can shop the coverage for you. So they're not tied to one specific company. So based on your situation, we can look at it and shop it with every company on the market to see which one has the best premium. And you don't pay the advisor for that service. It's actually the companies that we do business with that compensate the advisors for doing all of this. So it's very individualistic, but for example, a 40-year-old female can be insured for $500,000 for as little as $30 a month, but there's no limit to how high and how low it can go.
Okay, perfect. Is there a waiting period before coverage goes into effect?
In almost every situation, no. The only time that this would be an issue is if you currently have a health issue. So you're just coming off of cancer, you're just coming off of a heart attack. The insurance company might put a 1 to 2 year waiting period, but you would know contractually before you accept the contract if there is such a waiting period. But I'd say 99% of the cases, no, there is no waiting period until the coverage comes into effect. It's as soon as you sign the policy and pay a premium, the coverage starts.
Perfect. Does the plan require a physical exam?
So this entirely depends on your age and the amount of coverage that you're applying for, because there's different underwriting guidelines for all situations. So for example, a 27-year-old mother for $500,000 can have no physical exam whatsoever, just a simple questionnaire. But on the other hand, we just insured a 58-year-old female for $100,000, and she had to go through the physical exam. So it all depends on your situation. But before you apply, you'll know exactly what tests are required.
So is it the age factor?
The age is the biggest factor, and also the insurance amount. So it's all under 100,000, or then over 100,000 to 500, 500 to a million, 1 million plus are all different qualifications too.
Okay. What lifestyle factors can impact your life insurance policy before and after the plan goes into effect?
So smoking status is the main one here. So somebody who's a smoker will normally pay about 50% more in premiums than somebody who's a non-smoker. But if you're a non-smoker, the day you sign the application, the day your coverage starts, you can start smoking anytime afterwards. It does not affect your rates moving forward. So an insurance company can only underwrite for your current health and your current lifestyle and your past. They can't move forward. So once the contract is in place, they can't go back and alter your rates based on if you started smoking or if your health deteriorated or anything. So they can only go on what is on the application. So moving forward, if your lifestyle does change, won't affect your contract.
Yeah, which makes sense, right?
Yes. Yeah.
What happens if you miss a monthly premium or you're late for a payment?
So that's not the end of the world, because when it comes to insurance, you're always paying for the month forward. So if we're paying in March, then you're paying for the month of April. So if you do miss a payment, you're going to receive a letter and an email from the insurance company, and I will receive one as well. So then we get in contact to catch up on that premium. But you have 30 days until your coverage would cease.
Okay.
Then if you miss 30 days, your coverage would cease, but you can always catch up on your payments up to 90 days down the line. So if ever for some reason the funds just aren't there, you can plan 2 months down the line. If you just catch up on your payments, your contract would just reactivate as is. You wouldn't have to go through a brand new application or have any fees or anything like that.
Okay. Does the life insurance plan have a cash value if you decide to cancel the policy?
So some do. So there's two main types of insurance out there. So there's term insurance and there's permanent or whole life insurance. Most permanent life insurance contracts do have cash value, especially what's called participating life insurance and universal life insurance. So participating life insurance pays dividends of the insurance company, and universal life insurance contract, you can invest any dollars that you overfund in the insurance. You can invest as same thing you would in a TFSA or an RSP. So both have significant cash values. And they're great contracts because they grow over time. So they keep up with inflation and they actually perform better than inflation. So because we all know that $50,000 in 1975 was worth a lot more than $50,000 in 2020. So the good thing about those contracts is they keep up with the inflation of money. And an important thing to keep in mind is you can access that cash value while you're alive as well without canceling the contract. So if at any point you need some money, you can always take a loan against your policy, or you can take some money out. So you don't have to outright cancel the contract to access some of the money. And if you do cancel, then obviously you would get all of it. Term insurance, on the other hand, has no cash value. It's to cover for a specific need for a specific amount of time. And when it's over, you just cancel it as if nothing happened.
Okay. What is the process to change life insurance beneficiaries?
So this is very simple and it happens all the time. It's a change of beneficiary form. So whoever owns the contract has full control over who is the beneficiary of the contract. So if you want to move from a guardian into a trust fund, you can do that. If you want to move from a relative to another, from one guardian to another, from a child to whatever it is, you have full control over that. The only time that you would not be able to do this is if the contract was mandatory by the courts. So sometimes in divorce agreements or sometimes in business agreements, you have irrevocable beneficiaries. But in the case of most contracts, you have full control over the beneficiaries.
Okay. Under what circumstances can an insurance policy be canceled?
So anytime you want, there's no penalties if you cancel the contract from the insurer's standpoint, from the company. It's good for them because you've paid into it for a certain amount of years and you cancel the contract so they never have to pay out. Okay, so for them, there's no fees for you to cancel it. But one thing I did want to mention is be sure to speak with an advisor before you cancel a contract, because we hear it all the time. People tell us, I wish I hadn't canceled my contract in 1995 or whatever it is that my parents got for me, because the contract that you had back in the day is probably the best one you'd ever have, because the older you get, the more expensive insurance becomes, and harder it is to get. So before you cancel the contract, speak with your advisor, because you might be able to get a premium vacation, so you don't have to pay for a year or two while it uses cash values to pay for your premium, or you can simply reduce the face amount to help with the premiums. Cancellation should be a last resort.
Okay. That's good. Good to know. Are there situations where the premium may change?
So this is pretty much only for term insurance, which we mentioned earlier. So for example, if you have a 10-year term contract, at the end of those 10 years, your contract would renew to a new 10 years based on your new age, and it does not assume health. So your premium would kind of go like a staircase where it goes up every 10 years. But if your health is still good, you simply reapply and it brings those rates back down. And this is why, as I mentioned earlier, that we do a needs analysis before we enter into a contract. Because if your need is permanent, then we don't want a 10-year contract where it's going to go up every 10 years. We want to make sure that it stays level throughout. So whether it's 10 years, 20 years, 30 years, or for life, again, we want to make sure that that premium stays level. In most cases, it won't change. But on the other hand, you can get what's called a limited pay contract. And a limited pay contract is a a contract that's good for life, but that you can pay in a limited amount of time. So as little as 10 years and the contract is still good for life. You can pay it off in 20 years and your contract is good for life, or up till age 65 and your contract is good for life. So unless your contract specifically specifies that there's going to be changes in the premium, there's not going to be any changes. So before you enter in the contract, you'll know exactly what your premium structure is, how long you're going to have to pay for it, and how long until there's an increase or anything like that.
Okay. How are benefits paid out?
So the benefits are paid out tax-free and fee-free to your beneficiary. So if the beneficiary is a minor or a child with disabilities where the money is going to go to a guardian or trustee, you want to be sure that you have a proper will in place to dictate how those funds are going to be utilized. Okay, so you want to have control that they're not going to receive 500,000 and be able to pay it anywhere they want. You want to have it structured, but in whatever case, whoever gets the money, they're always going to be paid out tax-free and fee-free to whoever you have named as beneficiary.
Okay. How long does it take for benefits to be paid out?
So normally it takes about 10 to 21 days for a claim to be resolved. And from there, the check is simply made out to the beneficiary. It all depends how quickly we receive the documents that we need. So either the death certificate and sometimes a doctor's report. So the quicker we get that, the quicker we can get that check sent out.
Okay. Can I increase or decrease the benefit amount after the plan goes into effect?
So you can decrease at any time and the premiums would then be reduced accordingly based on how much you reduced. But to increase the coverage, you might have to do a health declaration to prove that your health has not deteriorated since the application. Or if it's a bigger amount, it could bump you up into a new underwriting bracket, I guess. So in that case, you might have to go through some more medical testing. And the reason for that is if there wasn't this in place, everybody would just get, the minimal amount of insurance. And when they get sick, they increase it all the way to the max. So if you increase it, chances are you're going to have to do a declaration or some sort of medical testing to prove that your health is still the same that when you apply for it.
Can I pay premiums online or make electronic payments?
So yeah, you can make your payments monthly, annually, and some companies will even give you quarterly or semi-annually. You can do automatically, so pre-authorized checking the same way that you pay your Netflix bill or your Hydro or anything like that, or you can pay by check or for fund transfer. So it's whatever's easiest for you. And one thing to keep in mind is if you do the payments annually, normally you get a little bit of a discount over making your premiums monthly.
Okay. Can a family member make premium payments if I'm no longer able to?
So yes, so many insurance policies cover an individual and they're owned by somebody else. So a good example is if a parent is buying insurance for their kids. And a good reason why people do this is because it's never going to be easier and less expensive to buy insurance than when your kids are young. So oftentimes the parents own the policies for the kids and they pay the premium. When the child turns of age, they can either make them policy owners, they can transfer the payments, you can arrange that whichever way you want. And another example is if the insurance need is too big for an individual to afford for the whole premium, you can split the premium. So both spouses pay into the plan, or oftentimes if it is a child with a disability, the guardian can also help pay the premiums because they know one day they're going to have to take care of this child and they might not have the funds for it. So they can say, you know what, I'm going to split the premium with the parents and they both pay the premium for the child to make sure that they have the proper care once the parents are no longer able to take care of them.
Okay. Is there an application fee to apply for the plan?
So none whatsoever. It's a three-tiered process to apply for insurance. So number one is we do an application, which has no fees. Number two, the company underwrites the policy. So based on the application, they do their underwriting process. And number three, they send us an offer back. So at this point in time, we would review the insurance offer, which normally is very accurate to what we applied for because over the years we've become pretty good at knowing based on your health situation and based on everything what the offer is going to be. And if we accept the offer, that's when the payments would start. So the moment that you pay a premium, your coverage starts, but there's no policy fee. If ever you were to receive the offer and you say, you know what, I don't like this offer, and you cancel it, you refuse it, there's no fee whatsoever to apply.
Okay. What is the appeals process if benefits are denied?
So with life insurance, it's normally extremely black and white if fraud was committed. So nothing can be done if the claim is denied, because the insured would have knowingly and purposefully lied on the application, or the other reason why the claim would be denied is suicide within the first 2 years of the application. Because unlike house insurance or car insurance, where there's a lot of gray areas, when it comes to life insurance, the company has all the information in their due diligence from the underwriting process. So they're the ones who assume the claim when they accept your application, when they offer you a contract. So it's extremely rare that any claims are denied. But if for some reason any claim is denied, it's 100% your right to take that to court and to appeal the decision.
Okay. Can the insurance company change benefit terms after the policy goes into effect?
So no, because again, it's based on the current situation. So unless the contract was built and designed to change over the years, and it's clearly shown in your contract, there is no reason why they would go back and change the terms or the coverage or the benefits in your contract.
Okay. So Jim, last question. What happens to my policy if the insurance company is sold or changes ownership?
Yeah, so the company buying the other insurance company buys all the contracts as is. So there would be no material changes for the clients themselves. So I worked at Sun Life exclusively for 5 years. And so they were Clerica back in the day, and then they became Metropolitan Life, and then they became Sun Life. And we still have contracts from the 1970s, 1980s from the Clerica and MetLife days. So for the clients, there has been no material changes for their contracts whatsoever. And same thing these days. So Standard Life was just purchased by Manulife. The contracts have not changed. Same with the merger from London Life, Great West Life, and Canada Life. They all merged to Canada Life. For the clients, no material changes because the company buys all the contracts as is. So that's pretty much it.
Cool. And Jim, how do we contact you if we want to get life insurance?
So I will give you all my information. Best way is by email or by text, or give me a call. I do have a 613 number. I am located in North Bay, but you can just give a call at any time, send me an email. And the way that it works is we just start with a conversation and we try to figure out, okay, what your need is. But any point in time, there is no fee. We're not lawyers. We're not accountants. If you do want a conversation with us or a consultation, you won't walk out of there with a bill. So if ever you just want to ask questions or find out how much it would cost to get an insurance plan, just feel free to reach out and we'll be more than happy to help you.
Perfect. Well, this was great. Thank you, Jim, for providing all that information on such a sensitive but important topic.
Absolutely, no problem.
Have a good day.
You too.